Good morning, both of you, and thank you for being with us.
Very good morning.
Right. Let's begin with the first query that we are getting at this point in time. It's coming in from Hector. Hector wants to know about the 20 stocks of Maruti. Says that he's been holding it for about 3 months, can hold it for longer. 7 months more, that's his outlook. And what levels should he be targeting? So let's take that question first up. Let's come to you, Sharmila. So what's your sense on that one?
Honestly, I think 7 months is too short a period because I think definitely Maruti is a stock that, if you bought it at these kind of valuations, you should be looking at, to hold it longer. Overall, I'm positive on four-wheelers as a play because, what we've really seen from the start of this year is the fact that the GST changes have worked in favor of auto as a sector and definitely four-wheelers. Maruti was somewhere behind as far as the EV game was concerned, but they're catching up. And, I think there's a lot to look forward to. I think, in any month, if you pull out the top 10 selling cars for the month, at least 5 or 6 of those will be Maruti models. So that kind of gives you a sense of, the position that it holds in a country where the demand for four-wheelers, passenger vehicles is only increasing. So, I don't have a short-term view on Maruti, but it's a positive view, and I would really recommend that he holds on to it for longer.
All right, and Kunal, what's your take on that one? He wants to hold it for 7 months and no longer.
I think it's a good time frame. Short-term wise also, I think if you're looking at, I think Maruti is very close towards breaking the 200 DMA resistance around the 14,500 mark. The moment I think the stock, hopefully I think scales past about those levels, which should happen in this time frame which you have expecting. I would sense that the stock should be good for a breakout towards 15,000 to even 15,500. I'll suggest a hold.
All right, so it's a hold on Maruti Suzuki, but we have a live viewer on the phone line as well. This is Mr. Dinesh Rohit. Hi, good morning, sir. How are you?
Hi, I'm good. How are you?
Doing good, thank you. You're calling from?
I'm calling from Visakhapatnam.
All right, so you can ask your question. Our experts can hear you.
Yeah, so my question is regarding Vedanta Property Platforms Limited. As we all know, the demerger is upcoming. So I'm planning to invest 1 lakh in Vedanta, keeping in view the demerger of Vedanta Property Platforms. So I would like to know whether the Vedanta Property Platforms will unlock the same value as Vedanta Aluminium Debt, and what is the expected listing price of Vedanta Property Platforms?
All right. So let's take a technical as well as fundamental. I'll go to Sharmila first. Sharmila, do you like his strategy?
Well, honestly, once the main demerger happened, my attention has really been on some of the other play, Vedanta Aluminium, as he mentioned. So I'm not too clear on how this, I'm not really worked out the pricing that Vedanta as well as Vedanta Real Estate would get. What I do understand is that a lot of debt will stay with the parent company. So from that sense, I think that, even once the split happens, maybe you should choose to be with the Vedanta Real Estate bit. But, you can definitely take a technical call on this as well.
Also, Dinesh, just out of curiosity, are you open to invest this 1 lakh in any other counter? I'm sure it's an investment perspective, but any specific reason why Vedanta and this strategy, or you're open for other recommendations? Because then accordingly, we can take a take from Kunal and maybe more names from Sharmila as well. Dinesh.
Sure, I'm open for recommendations. The reason why I'm preferring Vedanta Property Platforms is we have already seen the demerger of 4 listed entities and the value it has unlocked to the investors. So, and Vedanta having a robust, the land book. So I'm expecting a decent listing, so I would like to take your view as well on that.
Perfect. Kunal, on a specific question, I'm not sure if you have a recommendation, but otherwise 1 lakh rupees if he wants to invest where great valuations and great timings.
See, valuations, of course, difficult to say, but I think in terms of timing, looks like that the defense stocks are making a comeback. You might want to look at HUL at the current levels. I would sense after this up move, the stock is very close towards a multi-month breakout. So that could be one stock which you may want to keep an eye on. Reliance, I think, is also trying to come back into its own. The stock has been underperformer for a prolonged period of time. I think at this 1,300 levels for Reliance Industries, the risk reward looks to be fairly positive and attractive.
Sharmila, would you want to recommend more names since now we have more clarity because he's open for other recommendations also?
One other thing that I would like to point out is that while yes, they have spoke of a demerger, I was just trying to look in the while you all were talking as to whether a timeline sort of has been discussed. Because from what I remember is that from the time they spoke of Vedanta demerger for it to finally go through, there was a fairly long sort of waiting period. And here again, I think the swap ratio is for every 20 shares of Vedanta, you get 1 share of the real estate, and they're going to transfer their real estate property there, which makes Vedanta holding even less attractive to me, very honestly. So yes, I think I wouldn't put my 1 lakh in this to start with. I would probably look at some other names, especially if you have like a year's horizon. I think we spoke of Maruti. I think even Maruti is a good name at this point in time. Because auto is a sector that I do like. We are seeing some profit booking coming in. I do like the two-wheeler space also within that space. So, you could look at some other sector. I'm not too sure of what the timeline on this will be and, what the breakup is going to be.
All right. Let's now move on to a WhatsApp query that we've got. I think Anita has written to us, wants to know about Afcons Infrastructure. Holds 1,000 shares at 340 rupees, is asking for an advice. Well, the stock has been down nearly 10.5% over the past month. Let me go across to Kunal on this one. Kunal, what's your view on this?
See, the view is that the stock is still evolving in terms of the price trends. So far, it's come back towards retesting of the Feb-March lows for Afcons. The stock rallied from 280 levels to 350 and then back to that 280 levels as of now. So it looks like that maybe the stock is coming back into a bottom formation, but it's not a chart which I would encourage to average out at the current levels. I would sense that if it give it another maybe 6 months or so, there could be a possibility that if the stock holds on to the support of 280-ish, which is the previous low in the month of Feb-March, then there could be a rally back again towards 300, 340 mark. So the closer you get to your cost price, I think the better it is for you to look to exit the stock, but give it a time frame of another 6 months.
Any other place where he can put the money to recover his losses?
So the two names which I mentioned, the likes of HL as well as Reliance, they could be something which you can look at.
All right, let's move on and let's take the other WhatsApp question coming in from Mr. Venkat Rao. It's on PFC and REC. PFC bought at 480. He also says that he's a senior citizen and he says he's a long-term investor, but he can hold on this counter for almost 6 months. And he wants to know if can he exit, and there is the buy price of REC he's given. He's given it at 520. That's the REC buy price also. So Kunal, let me just come to you. He's a senior citizen. Sir, I'm sure that you're aware of your risk appetite because it's just a 6 months time frame in both of these counters. Kunal, what would you recommend?
See, I think both these stocks are a hold, but I would not suggest to expect much beyond for the next 6 months, because the stock price have been falling quite consistently over the last 2 years or so. I think from 2024 highs where REC was almost at 650. That stock has been constantly falling. There was a point where I think for 5 or 6 consecutive quarters, the stock had shown negative price action. Expectation is that in the next couple of quarters, the stock could be on the path of recovery. But the PSU index, many a times, and few of the PSU stocks have a tendency of detaching themselves in terms of the index correlation. So you might probably have a point where the Nifty can come back to a breakout, but possibility that REC can continue to show very muted returns. So you can continue to hold on, but I would not suggest to average out.
Right. A quick word in from Sharmila on that one as well.
Yes, so obviously I think what we are also looking at is a merger between the two companies. I think the record date is some April of next year. For every 100 shares, I think, of REC, you get 88 shares of PFC. So they're going to become one company. I think that's what you should be really looking at from a longer term perspective, because both companies, as Kunal also pointed out, they're companies that I like, but I don't see anything happening in the immediate sort of next 6 months, because you are going to look at these sort of merger dynamics in the interim. And what the combined entity will do is that, where financing of power projects and, all that happens, you will have like a larger company, and, the dynamics of that will play out in terms of a bigger balance sheet, etc. So perhaps it might be best if we can hold on to wait for the merger to take place and then take a call on the stocks, because I too don't really see the stocks going up in a hurry.
All right. So I hope, Venkata, you've got your response broadly on both shares. We slip into a very short break right now. Thank you, Sharmila, as well as Kunal, for joining us.